and welcome homeowners. My name is Mark A. Stafford. I'm a licensed real estate agent in Phoenix, Arizona, and this is part one of helping homeowners. We're going to take a look at short sale reasons. Being financially distraught is not the only reason that a lender or lenders will accept doing a short sale. A lot of people come up to me and ask me, Mark, I just want to move. I've gotten transferred my job. I've got a new job. Please help me understand when I can sell my house as a short sale. And this is assuming, obviously, that you're upside down in your mortgage. Like Phoenix, Arizona, everybody's pretty much upside down, especially people that refied or purchased from 2004 forward. How can I sell my house if it's not worth what I owe, I want to move, and I don't want to get stuck having to pay a lot of money? So in this video, we're going to look at the hardship reasons that I've seen banks approve. And the first one we're going to look at, I actually have a whole sheet here, is mortgage issues. Mortgage issues can be your adjustable rate mortgage is resetting and you're experiencing payment shock. Having problems with your servicer, meaning your lender, and take note that probably over 85% of all banks only service loans for investors. So even if you're getting your mortgage statement from one of the main lenders like Bank of America, Wells Fargo, Chase, whatever, odds are they don't own the loan, they're just the servicer. And so do take note that when you're doing a short sale and they deny something, it's most likely because it's denied in the investor guidelines that your servicing bank has to follow, okay? But problems with the servicer can be a hardship reason to be able to short sell your house, should you be upside down. Balloon payment coming due and you can't refinance it. That's another big issue with a lot of people. They've got one of those crazy loans for 3 to 5 years and all of a sudden there's a big balloon payment due, and of course now because they're upside down they can't refinance. All right, moving on to health issues, which can include illness of yourself, should you be the breadwinner in the family, illness of a family member that's obviously draining your bank account with medical bills, a psychological issue, addiction issue, massive medical bills, and of course there are other reasons that I haven't seen yet, but I'm sure with a little research you can figure out some more. Next is employment. As I mentioned earlier, you having to relocate 20 miles or more seems to be the sweet spot for lenders to approve a short sale without too much hassle. When you get under 20-mile relocation, then it's kind of a little iffy. They might ask you for some money at closing or something along those lines, but 20 miles average seems to be pretty good. Employment reduction, loss of employment, obviously, loss of job, failed business, job relocation to another state. That's a really good short sale hardship, and maybe you don't want to be a landlord and deal with tenants or something along those lines. Next is death, either of the borrower or the co-borrower. Death in a family member that was supplying supplemental income to the household to obviously help keep it afloat. Next one is incarceration. Maybe the breadwinners somehow wind up in jail. That is a valid hardship for a short sale. Marital separation, military duty. Then property problems. These can include utility bills becoming excessive for whatever reason, excessive increase in insurance or property taxes or HOA fees. That's a legitimate short sale hardship reason. Excessive repairs that are not covered by insurance for whatever reason. Maybe your roof's leaking and your insurance company's denied your claim. That would be a valid hardship. Other damage to the property, natural disaster, maybe you got a flood, you didn't have flood insurance, that would be a short sale hardship reason, and maybe you got hit by a tornado and for some reason your insurance company's not covering tornadoes, but you can see where I'm getting at, damage to the property that is excessive and that it makes the house almost, if not totally uninhabitable, and you can't afford to fix the problem. And last but not least, you can't sell the property and you can't rent the property, or you don't want to deal with being a landlord and tenants. I do want to note one thing, that being upside down in your mortgage is not a hardship. It's a dissatisfied homeowner. So if you're in a neighborhood and the guy next door just bought a bank-owned home for $120,000 and you owe $250,000 on your house, that's not a valid hardship. You would have to try to figure out something else that you can leverage as a hardship. And I'm not telling you to commit fraud, I'm just telling you that there are other reasons that you can use that are legitimate so that you can sell your house. I've successfully helped a few younger people where, as an example, a young lady owned a condo totally upside down. She was getting married, wanted to move over 20 miles away and with her new husband at their house, at his house, and I turned the short sale package in, no problem. Bank didn't stammer or complain about anything. If you'd like a printout of all the hardship reasons I have to date, please visit my website, mark-stafford.com/hardship. You will find a downloadable PDF. Please feel free to download it. Of course, if you have any questions or comments, please leave them below this video, or through my website. You can contact me and ask me any question you like. I hope you found this video helpful, and we'll see you in the next video. Thank you very much.